Good evening, everyone. While everyone is obsessing over Bitcoin's price, Ripple, remember, has executed some of the largest stealth takeovers in banking history. I'll show you why Bank of America, BlackRock, and 300 other financial institutions are quietly rebuilding their entire infrastructure around XRP. Let's start with the elephant in the room. Somehow it may have flew under the radar. Maxwell Stein, an executive at BlackRock, the company that's managing $2 trillion, 10 trillion, in assets under management, went on record to quote, Ripple's blockchain could move trillions on chain. Now, if you've been following crypto for a while, you know BlackRock doesn't throw around statements like this casually. They're positioning XRP as the settlement layer for tokenized real-world assets. We're talking stocks, bonds, real estate, trillions of dollars of traditional assets moving on the XRP ledger. In 2025, Ripple dropped $4 billion. That's with a B, acquiring traditional financial companies. We're talking $1.3 billion for Hidden Road, a quantitative trading firm that handles institutional order flows, around $1 billion plus for G Treasury, the company that manages treasury operations for Fortune 500 companies. Think about what that means. Ripple isn't trying to disrupt banks from outside anymore. They're literally building the infrastructure that banks run on. They're building the plumbing of traditional finance. And most people in crypto have no idea that this is happening. Ripple's acquisition strategy reveals their true play. Become essential infrastructure for TradFi, not an alternative to it. This is the Trojan horse approach to the banking transformation. Bank of America started testing Ripple's RLUSD stablecoin integration back in June of 2025. PNC Bank became the first U.S. bank on RippleNet, processing actually cross-border transactions. Santander is using Ripple's OnePay foreign exchange for international payments. Standard Charter just published a price target of $8 for XRP by the end of 2026. But here's what nobody is asking. Why would major banks risk their reputation on technology that wasn't absolutely rock solid? The answer is simple. They've been testing this behind closed doors for years. We're just now seeing it go public. All right. This is the technical breakthrough that changes everything. And it's coming in 2026, quarter one of 2026. This month, potentially the next. The XRP ledger is launching confidential multi-purpose tokens using zero-knowledge proofs. Now, if that sounds like tech jargon, here's what it actually means. Banks can conduct private transactions on a public blockchain while still meeting every regulatory requirement. Think about why that matters. Right now, banks won't touch most DeFi because everything is still transparent. They can't have competitors seeing their trading strategies or clients seeing other clients' balances. Zero knowledge proof, that privacy solves it all. It's like having all the benefits of blockchain, instant settlement, lower costs, 24/7 operation, with the privacy of traditional banking. This is the enterprise DeFi breakthrough everyone has been waiting for. Okay, this next part is absolutely critical. I haven't seen anyone else explain why this matters. In late January, literally a few weeks from now, the XRPL is launching native lending protocol. We're talking fixed rate lending pools with isolated risk that don't even require on chain collateral. Now, here's why bankers are losing their minds over this. The traditional overnight lending market, where banks lend each other money to balance their books, currently it's slow, it's expensive, and only works during business hours. The XRP Ledger's version is instant settlement, 24/7 at low cost, transparent risk pricing. This isn't replacing some obscure crypto feature. This is replacing a core primitive of how entire banking system operates. That's the scale of disruption that we're talking about. Here's the genius part that tech people understand but doesn't get talked about enough. Ripple is making the XRP ledger modular. Now, what that means is that it means banks can upgrade individual features, add new features, improve performance without risking the stability of the network. Think about traditional banking systems. Every upgrade is a nightmare because everything is interconnected. One bug can crash the whole system. With modular XRP Ledger, you can upgrade the lending module without touching payment rails. You can add new privacy features without disrupting existing transactions. This is why enterprise IT departments actually are willing to consider this. It's not rip and replace, it's gradual, low risk integration. That's how you actually transform a multi-trillion-dollar industry. All right, buckle up because this is where things get geopolitical. China just announced again that in January of this month, their digital yuan will pay interest. Now, you're not in finance, you might be thinking, so what? My bank account pays interest. But here's the thing, no other CBD does this, and there's a reason. If a government backed digital currency pays interest, why would anyone keep money in a private bank? China just turned their CBDC into a direct competitor to commercial banks. This essentially is a fundamental threat to Western banking model, where banks use deposits to make loans. So this directly challenges Ripple's entire value proposition. If governments are offering better digital currency solutions, do banks need private blockchain infrastructure? So, more to follow on this as China weaponizes the digital yuan as an interest bearing deposit instrument. So, while China is executing this aggressive cryptocurrency strategy, what is America doing under Trump administration? We've got an executive order banning CBD development. Now, I'm not here to debate, but whether CBDCs are good or bad, but the geopolitical competition stands out, and America is sitting outside of that race currently. We currently are absent from digital currency revolution while China and Europe are building the infrastructure that could define the next 50 years of global finance. Here's the twist. This regulatory vacuum is exactly why private sector solutions like Ripple are thriving in US banks. If the government won't provide it, they're turning to private companies. Ripple's entire US strategy is basically, we'll build what the government won't. Okay, here's where Europe is also playing 4D chess while everyone else potentially could be playing checkers. They're pursuing both a CBDC, the digital euro, and they've created the most comprehensive crypto regulation framework in the world with MiCA. Think about the strategy here. They're not betting everything on government digital currency like China. They're not banning CBDCs like America. They're creating a regulatory environment where both public and private digital currencies can coexist. And companies like Ripple, they're thriving in this environment because there's clarity. Banks know the rules. Crypto companies know the compliance requirements. Innovation can happen without constant fear of regulatory crackdown. This might actually be the winning approach. Not the most aggressive, not the most restrictive, but the most balanced. I hope that you all enjoyed this session and have an amazing evening.